Protecting property, slavery, and insurance. Between the late 18th and mid-19th centuries, the practice of slavery grew from the forced labor of African captives into an invaluable source of economic growth in the American South. Slaves were primarily used in the large-scale production of cotton, tobacco, and rice in the southern states. However, the expansion of industry in the 1850s also relied on slave labor for financial gains. Owners of slaves and industry thereby needed to protect their investments and their businesses. They had the responsibility to prevent the loss of income by insuring their property. Since slaves were their human property, slave owners bought life insurance for their slaves. These policies presented slaveholders with the means of protecting their livelihood. It would protect those individuals who depended on slave labor from financial loss in the undesirable event of death. Done in response to the demands of industrialization, the practice of insuring one's property, whether human or commercial, can be seen as a common business procedure. In the 1850s, the gradual rise of industrialization expanded the role of the middle class and the nuclear family. There would be a primary breadwinner in a single-family household of the industrialized northern states. During the early 19th century, life insurance was a radical concept, and people were hesitant to place a monetary value on a family member. However, over time, the hazardous occupations of industrialized cities provided the realization that the loss of a primary breadwinner will leave the family desolate and financially troubled. Therefore, taking out life insurance policies on workers in the upper middle class became an important part of living in the northeastern states. In the 1820s, the upper southern states, such as Maryland, North Carolina, and Virginia, began to industrialize in the fields of tobacco, coal, and iron manufacturing. Yet the practice of placing a monetary value on the life of a loved one was uncommon in the South. Unlike the northern states, most of the hazardous occupations in the southern states, such as mining and construction, were done by slaves. As a result, slaves were at a higher risk of injury or death. At the same time, the death of a slave would result in the loss of property and income for the slave owners. The livelihood of the slave owners depended on the ability of their slaves to perform. Slave owners invested money in their property, in other words, their slaves. Therefore, slave owners were motivated to find a way to protect their investments. As life insurance gradually spread from the north to the south, the American population began to accept life insurance policies. In the period before the Civil War, slave owners began to buy premiums on slave life insurance. In spite of this unusual period in American history, historians usually fail to examine the full impact of slave insurance policies. Historians may also examine the effect of slave insurance policies in promoting the institution of slavery. Life insurance companies profited from the prolonged existence of slavery as long as slaveholders continued to insure their slaves. However, life insurance companies may also receive credit in making the lives of slaves slightly better than the period before they were insured. Life insurance policies would experience a monetary loss if a slave with life insurance died. It was part of their job to protect the slaves from harm and decrease the slave's risk of death. The insurance agents may have personally inspected the working conditions of slaves. They may have also issued regulations on the environments in which they worked. Life insurance and regulations in the workplace can be assumed to have saved the lives of numerous slaves. Whether it was a responsible business maneuver or an act of greed, slaveholders and insurance companies both profited from slave life insurance policies. These policies allowed slaveholders to protect their property and prevent the loss of income, and life insurance companies saw their opportunity to make profits during a period of industrialization. It was also remarkable that the records and the motives of these life insurance companies were questioned about 150 years later. Reparations now, slavery and life insurance. Throughout American history, there has been no occurrence that could parallel the peculiar institution of slavery. Were insurance companies partly to blame for the atrocities of slavery? in the 21st century, the movement to get reparations for slavery has brought these issues under further historical investigation. As historians, one should ask what slave life insurance policies revealed about the past. In the 19th century, slavery was commonplace in both the southern fields and newly established centers of industry. In response to a growing need to protect one's property, insurance companies advertised the sale of life insurance policies for slaves. Yet were they directly involved in the exploitation of humans for monetary gains? This question leads back to an investigation for the main purpose of slavery. Who can really be held responsible for the atrocities committed over a century ago? These archival records unveil an untold story behind the life of an insured slave. The reparations movement should seek a greater understanding of the lives of slaves rather than monetary gains, like slave owners tried many years ago. These records help fill in historical gaps in the field of slavery, therefore providing a significant contribution to the study of American history.